Hello traders and welcome to our market update video. It's still Napan here, founder of Master of Markets, a trades conference and a traders open day. So here we are, almost coming to the end of this month, 29 March. Can you believe it, traders, right? It's already quarterly already, as 3 months have gone by in the year already. Can you believe it? That's what it is. Time just flies. So how have we all done? Okay, before I go on to that, as we usually do in our market update video, we're just going to be looking at one topic. Now, the topic for today is the one of the most common ones which actually stop traders from getting consistent performance, which is basically how do you avoid getting stopped out? Very irritating, is it not? When the trade is going well in your favor and you get stopped out and then it goes towards your target, or sometimes it stops you out and all the unrealized profit that you had just diminishes and dissolves away. So, what is the way then? 3 points to avoid getting stopped out, okay, is what we are going to be looking at today. Now, so the first point I would say that you should be taking a look at is the first question to ask out of the 3 points is where do most people, most traders put their stop losses? Okay. That's the first question you got to ask yourself. So, where do most traders put their stop losses? As you know, one of the most common points where traders put their stop losses is moving averages, is it not, traders? So, let me just put a moving average over here, a 20 moving average, very simple. So, most traders would put their stop losses behind moving averages. Another one, which is quite common, is also your fib levels, is it not as well? So your fib levels and also also the low, a high and low of bars as well. So like that you can keep listing them down. So support and resistance lines as well. So once you have listed all the probable places where most traders would put their stop loss, you can then go on to the second point. Now before I tell you the second point, out of the 3 points, you got to first ask yourself, okay, Thiru, but why are we analyzing all of this? Why do we need to know where do most people put their stop losses? Because you see, traders, what is a stop loss really? I mean, if you are already buying into a position, or as we call in our terminologies, or if you're already long into a position, then the only way that you can get out, either for a loss or a profit, is by, as you have guessed it, is only by selling, is it not? So the sell order, if it's worse than our market price, means below our market price, then that's what we call a sell stop, right? And that's what becomes our stop loss, traders, is it not? So that's what this is all about. So your stop loss is a way where you get out. That means where people want to sell the orders and exit the market. Now, another way that another trader can come in and get it at a better price is by buying from all these sell stops, isn't it? From all these stop losses, or in another way, right? It's only from buying from all these stop losses. Okay. Right, so that's why the big guys, smart money, can be looking into all of this, is it not? As especially when you're looking into accumulation phase. So I will start looking into the moving averages, fibs, support resistance, your high and low of bars to buy it from you at a cheaper price, then make it then move further up. So then how do we then reconcile all of this together? That's why the first thing is where do most traders put their stop loss? Then the second thing then I can then start looking at traders is basically putting my stop loss where it is away from most of the people. Okay, so for that a guideline can be put it at least behind two tires of stop loss, at least behind two tires of stop loss. So at least behind a moving average and a fib, or you can use a moving average and a high and low of bar, or moving average and a support resistance, or any combination of Fibonacci and a high and low, or Fibonacci and a support resistance, at least behind two tires of stop loss. Okay, so that could help you as well. That's the thing. And then finally, when time has passed, so this is your 3 points, right? First point is where most people put a stop loss, and second point is put it behind 2 times the stop loss, and finally the third point is please use time. As time goes by, let's say 5 days have passed by or 3 days have passed by, according to whatever strategy you're trading, or maybe even intraday, maybe 5 hours have passed by, according to time, then you must also get aggressive as well with your stop loss. Okay, so if I were to give you any kind of guideline on aggressive stop losses, I would just say follow from the beginning of being conservative, then get to moderate, then get to aggressive. Okay, so that's how you should be following through as you are trading through your strategy. Okay, and also in this point of stop losses. Okay, so in summary, what are the 3 points that you should be looking at to avoid getting stopped out? Is first of all, ask yourself, where do most traders put their stop losses? So where are most of the stop losses? Second thing is, once you have identified that, then put yours behind 2 tiers of stop loss. And then the third point, then traders, is then get aggressive on your stop loss over time. Okay, get aggressive over time. So the 3 ways is to conservative, then moderate, then aggressive on the third point. Okay, I guess that's pretty much that on the topic for today. So go and dwell on that. So you see, for example, we had a trade over here on the cable position on the prime profit setup based on interruptions in the market. And we did enter it on the close over here, stop loss over there. And then you can see that once we had this outsider bar here, we asked the same questions again because over time has passed by. You see 1, 2, 3, 4 days already passed by. And then after that, we just get aggressive in this particular strategy on the outsider bar and we place our stop just behind that outsider bar. And you can see the next bar itself did take us out. But then we had already broken even and taken a little bit of a profit. Whereas if you had waited, then you can see what would have happened. We would have just got more into our drawdown further and getting to our stop where it was. It would have probably been stopped out as well. Okay, great. So that's to do with that on that topic. Now, how do we do for this week so far? As you can see over here, what's our performance has been. The performance so far, we only had one trade so far, prime profits, and in that we had a very small profit of 0.19% in terms of cable trade, which I just shown you, 0.19%. In terms of the LTR, flat out, no trades at all that we took this week. In terms of pips, what do we have? So in terms of pips, we got 25 pips. Okay, 25 pips of profit is what we got. Okay. So if that was £10 a pip, that would have been £250 of profit. Okay. Right, I guess that's pretty much that from me on this video. As you know that if you got any other questions, of course, do feel free to contact us, email us, WhatsApp us, join our WhatsApp group. That's great as well. You can follow all the trades we'll be doing and get all of this in real time as well, how our performance is. Can learn from them as well. Okay, that's all from me for today. And as we always say, till next time, stay disciplined, follow your trading plan, and keep trading like a master.